You know, over these past several months, and truly speaking for the previous couple of years as well, it has become virtually impossible to avoid hearing about gold everywhere you turn your attention. Whether you're watching television programming, reading daily newspapers and publications, or spending time browsing through various internet platforms and websites, the relentless message is constant and overwhelming in its intensity. Gold has reached record-breaking levels never seen before in history. We're being told repeatedly that it represents the ultimate safe harbor and protective shelter in these profoundly uncertain and unstable times. Given the current situation where inflation stands at elevated levels, combined with the considerable and widespread uncertainty that is permeating every aspect of our global world, people and financial commentators aren't just suggesting anymore. They're practically demanding and insisting that you must possess and own gold to properly safeguard yourself and your family's financial security and future well-being. The dominant narrative relentlessly suggests that gold is the only truly dependable and reliable certainty in what appears to be a highly unpredictable and fundamentally unstable world. And you know what I've personally observed through my years of experience? Many people and investors are indeed listening intently to these messages. Enormous sums of money, billions upon billions and trillions of dollars, are continuously and relentlessly flowing into precious metals and gold holdings. People are experiencing genuine fear and deep anxiety, and they're desperately searching and yearning for something solid, something stable and tangible to anchor themselves to during this turbulent and uncertain time. This is precisely and exactly the situation we currently find ourselves navigating and confronting. What we're witnessing is essentially a frenzy and feeding mechanism, yet it's fundamentally and deeply rooted in very real and genuinely understandable concerns and anxieties about the future trajectory. However, I'm here to present you with an alternative perspective and viewpoint today that the prevailing and dominant conversation surrounding gold is fundamentally misguided and incorrect. It's completely and totally inverted from reality and truth. The majority of people and investors maintain the belief that the future trajectory and direction of gold will predominantly revolve around whether its price appreciates or depreciates over time. They imagine and visualize that it's primarily and mainly about analyzing detailed price charts and understanding inflation protection mechanisms. But the genuine transformation and metamorphosis, the truly significant shift that is preparing and readying itself to reshape the gold market fundamentally and permanently, bears almost no resemblance whatsoever to discussions about price movements and trading volumes. Instead, it's something far more profound, far more consequential, far more reaching, and regrettably, it's a story that virtually nobody seems to be paying proper attention to. By the conclusion of our conversation today, I commit and pledge to you that I will reveal precisely and exactly what this transformative event entails and encompasses. More crucially and importantly, I'll explain in detail what this means specifically for your personal finances and your family's economic situation, and what concrete steps and actions you should be taking right now and immediately. This is a truth that's been concealed and hidden in plain sight for many decades and generations. Let's begin our journey at the very foundation and starting point. Humanity has been captivated and fascinated by this particular yellow metal for thousands and thousands of years, stretching back through recorded history and ancient times. You'll find numerous references to it throughout biblical texts and religious scriptures. It appears prominently in ancient fairy tales, legends, and mythological stories. Kings, emperors, and pharaohs accumulated it obsessively and relentlessly. There's something genuinely and profoundly beautiful about this metal. It resists corrosion and deterioration over centuries, and skilled artisans throughout history have crafted magnificent and extraordinary objects from it. For an extraordinarily long period of human civilization spanning millennia, it actually served a legitimate and practical function as a medium of exchange and store of value. It possessed the specific characteristics and qualities required of effective money. It was remarkably durable and long-lasting, reasonably portable, and transportable, and could be subdivided into smaller units and portions. It worked well for its intended purpose and application. However, we must confront an honest and truthful assessment about what gold genuinely and authentically represents in the context of modern investing today. Before we progress further and reach the significant revelation I've committed to sharing, you need to grasp and understand this initial component and foundational piece of the larger puzzle. Let me propose a detailed thought experiment to illustrate this important point clearly and comprehensively. Imagine that we gathered together absolutely every single ounce of gold in existence on our planet today. Picture collecting and assembling every single piece of gold that has ever been extracted from the earth throughout all of recorded human history. All the jewelry adorning people worldwide, all the gold bars stored securely in Fort Knox and within every other central bank globally, every individual gold coin ever minted by any nation, absolutely everything and nothing excluded. If you were to melt down this entire accumulated quantity of gold, you would create a cube that measures approximately 68 feet on each of its sides and dimensions. Take a moment to visualize that mental image, a cube measuring 68 feet by 68 feet by 68 feet in all directions. This massive cube would actually fit comfortably and completely within the confines of a baseball field's infield without any difficulty. Now, considering today's prevailing market prices and valuations, approximately $2,000 per ounce, that single cube would carry a monetary value of somewhere in the vicinity of $13 to $14 trillion, an absolutely staggering amount. Think about that magnitude, $14 trillion represented by a single gleaming and shining yellow cube of metal. Now, let's consider what possibilities and opportunities would open up with that enormous $14 trillion in capital. With such an extraordinarily large sum of capital at your disposal, you could purchase every single piece of agricultural and farmland throughout the entire contiguous United States. That's right, every last acre dedicated to farming and agriculture production. You could additionally acquire and purchase approximately 16 of the most valuable and profitable companies in the world, corporations like ExxonMobil with their massive and consistent profitability and cash generation. And even after purchasing all the agricultural land across the country and acquiring 16 of these massive, consistently cash-generating industrial corporations and enterprises, you'd still retain approximately $1 trillion remaining for miscellaneous expenses, opportunities, and investments. That's correct. You'd still have $1 trillion left over for walking around money. So you face a fundamental and critical choice between two distinctly different options. Option A consists of the cube of gold that we've been discussing and analyzing. Option B comprises all of the productive farmland throughout the entire United States, combined with 16 enormous, highly profitable and successful corporations. Now let's project ourselves forward in time and imagine a full century has passed and we're looking back. At that future point in time, the cube of gold will remain essentially unchanged and unaltered in every measurable and significant way. It will still measure 68 feet on each side and dimension. It might be marginally larger if additional gold mining has occurred in mines throughout the world, but the original cube from today remains fundamentally unaltered and exactly as it was. It will have generated nothing whatsoever or of any kind. It will have created no earnings, profits, or productive output. It will continue sitting exactly where it was placed and stored. It will stare back at you mockingly and indifferently. You can shine it. You can polish its surface until it gleams and sparkles. You can run your hands across it. You can admire its appearance and luster. However, its value at that future date will be determined entirely and completely by whatever another person, the next buyer in the sequence, decides they're willing to compensate you for it. Its monetary value depends completely on the next individual being either more frightened and anxious or more excited and optimistic than you currently are. This is a critical insight. Now let's examine in detail what has transpired and developed with Option B, our collection of productive and income-generating assets. Throughout that same century of time, all of that farmland will have generated enormous quantities of agricultural products, corn, wheat, soybeans, and countless other crops and commodities. It will have nourished and fed millions and millions of people across generations. It will have created and generated unimaginable quantities of revenue and profit for its proprietors and owners. The 16 ExxonMobil equivalent companies, or whatever other premier and leading corporations you selected and chose, will have generated absolutely staggering amounts of energy production and resources, sold trillions of beverages and consumer goods, constructed millions of technological devices and innovations. These businesses will have continuously innovated and developed new products, services, and technologies. They will have provided meaningful employment and economic opportunity to millions of workers across multiple generations and time periods. They will have created new industries and transformed society. Most significantly and importantly for you as the proprietor and owner, they will have consistently distributed trillions and trillions of dollars in shareholder dividends and distributions. These investments will almost certainly be worth substantially more, many times what you originally paid for them. The multiplication would be extraordinary. Option A generates absolutely nothing of any kind. Option B represents an endless fountain and wellspring of productivity, abundance, and generation. It embodies the true engine of long-term prosperity and sustainable wealth creation. This single straightforward comparison forms the absolutely essential foundation for understanding what I will reveal to you as we conclude this comprehensive discussion. The fundamental distinction between non-productive assets and productive assets represents perhaps the most critical concept in all of investment strategy and financial planning. We are about to witness this crucial difference manifest on a magnitude that will stretch the limits of comprehension and understanding. So why do people experience such intense excitement and enthusiasm regarding this cube? Why do they feel such desperate urgency and yearning to possess a portion of it? The answer can be condensed into a solitary word: fear. Gold functions as the ultimate fear-based asset in the investment world. At moments when individuals lose confidence and faith in everything surrounding them, their governments and institutions, their currencies and money, their expectations for the future and what's to come, they rush frantically toward gold. It carries a sensation of ancient permanence and timelessness. It feels safe and protective. And commentators, salespeople, and financial advisors, they've perfected the art of exploiting and amplifying that fear and anxiety masterfully through their messaging and persuasion techniques. They communicate and tell you that your dollars are gradually becoming worthless and valueless. They display charts illustrating government debt climbing relentlessly upward with no end in sight, and they present gold as representing humanity's only lifeboat of salvation. Perhaps you've experienced that pull yourself, that nagging voice in the recesses of your mind suggesting, perhaps they're correct about this. Perhaps I genuinely should possess some gold just to be prepared for worst-case scenarios and outcomes. It represents a deeply human instinct, an enormously powerful and compelling psychological response. I understand these feelings and emotions completely and recognize their validity and realness. However, the difficulty and problem emerges when this instinctual reaction, this decision, driven primarily by fear and anxiety, typically results in making a genuinely detrimental and damaging long-term financial choice. You are essentially sterilizing and freezing your capital and accumulated wealth. You are allocating a portion of your accumulated resources and assets into something that cannot, by its fundamental and intrinsic nature, expand, develop, or generate anything of value. It's comparable to taking an exceptionally talented, diligent, productive farmer and instructing him to sit motionless in a chair within pitch-black room for the remainder of his natural life. The vast potential goes unrealized and squandered. Consider and reflect on what transpired during the early years of the 1980s. Inflation was raging extensively throughout the entire economy. The global situation appeared to be fragmenting and collapsing around the world. Citizens and investors rushed en masse into gold. The price reached its then record high of approximately $850 per ounce in 1980. The pervasive fear was absolutely palpable and tangible everywhere. But what followed next in the subsequent period? For the subsequent 2 decades, gold essentially stagnated and languished in the marketplace. It declined significantly and fell dramatically. An individual investor who made the unfortunate decision to purchase gold at the absolute peak of the fear-driven frenzy in 1980 was compelled to wait almost 28 years simply to recover their initial capital investment. And this calculation doesn't even account for the corrosive and devastating effects of inflation that occurred throughout that extended period. Their purchasing power was was thoroughly decimated and eroded. One investment path resulted in stagnation and disappointment, while the alternative path that same investor could have chosen led to extraordinary wealth creation and abundance. Yet both journeys commenced from the identical point of overwhelming fear and anxiety. The determining distinction between these radically different outcomes was fundamentally about choosing between a sterile, unproductive asset versus a thriving, dynamic, productive one. This historical example from decades past is absolutely essential and critical to comprehending what will emerge in the future, because what I'm about to communicate represents the logical extension and conclusion of this exact same story and pattern, but magnified and amplified by 1,000 times over through the dynamics and characteristics specific to the 21st century environment. The chasm and separation between productive assets and non-productive assets is on the verge of becoming truly enormous and seemingly unbridgeable. Let me explain this critical concept thoroughly. Throughout the last 150 years, and particularly intensely during the last 50 years of acceleration, something significant and fundamental shifted in human civilization and society. Humanity unlocked and discovered the mechanisms underlying exponential growth and compounding, technological advancement and innovation, capitalistic systems and markets, and interconnected global trade networks. These powerful forces have unleashed what might be described as a gusher of accumulated wealth, an engine of production and generation unlike anything our world has previously witnessed or experienced. The aggregate value of all productive assets globally, the stocks, bonds, real estate holdings, private enterprises, and businesses, isn't merely growing at a steady rate. It's compounding at an extraordinary and accelerating rate with each passing year and month. These productive assets generate absolutely enormous quantities of profits, earnings, and cash flow, trillions upon trillions of dollars annually. A substantial portion of those proceeds gets reinvested strategically to create even additional productive assets. It functions as a perpetual wheel and cycle of creation and generation. Meanwhile, what is that cube of gold doing in comparison? It's becoming slightly larger each single year, incrementally and slowly. Global mining operations extract approximately 2,500 to 3,000 metric tons of gold annually. This expansion increases the complete global supply by merely 1.5% per year. That represents it completely. A modest linear arithmetic increase in an environment characterized by exponential creation and proliferation. Do you perceive and understand what's occurring? The great wealth divergence describes the perpetually widening separation and gap between the combined total value of assets that actively produce wealth and generate income and the combined total value of something that merely sits inertly and motionless. For many decades, this divergence gap has been progressively expanding, but we've now reached a critical threshold where the magnitude has become almost incomprehensible and nonsensical in scale. The sheer quantity of wealth being generated every single year by productive operating businesses now substantially surpasses and dwarfs the combined value of absolutely every ounce of gold on our entire planet. And this constitutes the essential secret and insight. This represents what is approaching on the horizon. It's not that gold will experience a catastrophic price collapse and crash. It's not that it will become entirely worthless and valueless. Rather, it's that gold is progressively becoming permanently irrelevant and increasingly obsolete as a mechanism for preserving long-term value and wealth. The opportunity cost associated with maintaining your capital in gold is about to increase dramatically and move vertically. Making the decision to allocate your resources into a sterile, unproductive rock instead of acquiring a share in the global productive economic engine represents one of the single worst financial decisions an ordinary person can make in their lifetime. It's equivalent to deliberately choosing to travel by donkey during an era dominated by jet engines and advanced aircraft. Certainly the donkey does move and transport you, but you're being left behind at a velocity and speed that becomes progressively harder to comprehend and fathom. Consider this detailed illustration and comparison. The S&P 500 index possesses what we call an earnings yield measurement. This represents the complete total earnings of all companies comprising the index, divided by the current price valuation of the entire index. Currently, that calculation yields approximately 4 to 5% annually and each year. This means that for each dollar you invest, American businesses collectively are generating 4 to 5 cents for you as their proprietor and owner. That generated money can either be distributed to you as dividends, or it can be reinvested strategically to expand and grow the business operations even further and faster. What represents the earnings yield of gold in comparison? It's actually not zero. That would almost be preferable and better. It's genuinely negative and works against you. You must continually pay for secure storage facilities and vaults. You must continually purchase insurance protection and coverage. Maintaining and holding gold actually requires you to spend money continuously and perpetually. So the widening divergence manifests like this. The world's productive economic engine is compounding at positive rates. Gold is compounding at negative rates. Every single day, every single hour that passes, that separation becomes progressively wider and more pronounced. The transformative event, the phenomenon that's preparing to unfold, represents the moment when financial markets and the broader public finally awaken to this mathematical reality on an unprecedented mass scale. Currently, individuals across society still operate according to the older paradigm, the traditional fear-oriented model of asset allocation. However, modern technology and dramatically improved information distribution systems are making the underlying truth of this divergence increasingly visible and obvious to more people and investors. Younger generations of investors aren't constrained by the classical dogmas and traditions of previous eras. They observe a company like Apple that generates over $100 billion annually in free cash flow, and they compare it mentally to an inert lump of metal, and the selection becomes abundantly apparent and obvious to them. The ultimate and final catalyst will emerge when extraordinarily large pools of accumulated capital, pension funds managing trillions, sovereign wealth funds representing entire nations, institutions that have conventionally maintained gold as defensive just-in-case holdings, begin to publicly reconsider and question that strategic logic. When their teams of actuaries, financial analysts, and investment professionals present them with the harsh, irrefutable mathematical calculations demonstrating the substantial opportunity cost of maintaining gold, these institutions will gradually commence a reallocation process. They will progressively, then increasingly rapidly, trade their sterile, non-productive assets for genuine value-creating productive ones. That development will represent the definitive final blow, not necessarily because it will trigger an immediate catastrophic price crash necessarily, but because it will constitute the ultimate official institutional recognition that gold has essentially lost its appropriate place and role within the contemporary investment portfolio. Its overarching narrative will shatter completely. It will become relegated from a primary core asset class to a much more tertiary and secondary position. It will transform into merely a collectible, similar to fine art or rare wines, something that a small population of very wealthy individuals might possess, but decidedly not a serious fundamental component of any realistic financial strategy for generating long-term wealth for the average household and family. This represents everything I committed to communicating and revealing to you. The monumental event isn't a dramatic explosion or sudden shock. It's a quiet, gradual intellectual awakening and recognition, a profound realization of a mathematical truth that has been developing and accumulating for many decades. It's the great wealth divergence, the permanent irrelevance of non-productive assets in an era characterized by exponential wealth production and creation. Now, this information is certainly interesting and intellectually compelling and fascinating. You might reasonably ask, okay, this is all theoretically fascinating and well argued, but what do I actually do about it? Theory and philosophy are intellectually stimulating, but I need practical, actionable advice. I need concrete steps I can implement immediately, and that's precisely what I promised, and that's what I'm going to deliver to you at this critical moment. Here are the actionable implementation steps and strategies. This represents the most critically important section of our entire discussion and presentation. Here is my comprehensive three-part strategic plan, not only to successfully navigate through this divergence period, but to position your yourself properly on the advantageous side of it, enabling you to harness the immense power of the productive economic engine for your family's financial benefit and future security. Step 1. Acknowledge your fear, but create deliberate separation from your investing decisions. First and foremost, acknowledge and recognize your fear and concerns, but create deliberate and intentional separation between those emotional responses and your investment strategy and decisions. It is absolutely legitimate and reasonable to experience worry and deep concern about the future, about inflation, about governmental debt levels, about economic uncertainty and volatility. These represent genuine, valid concerns that deserve acknowledgement and respect. However, and this is absolutely crucial and essential, you absolutely cannot permit that emotional fear and anxiety to drive you toward making investments in sterile, non-productive assets. Here's exactly what you should do. Write down all of your financial fears and anxieties on a piece of paper or document. Write phrases like, "I'm afraid my savings will gradually lose purchasing power," or "I'm afraid a catastrophic market crash will destroy my portfolio," or "I'm worried about government default." Externalize all your fears completely. When you see them written on paper in front of you, something interesting and powerful happens. It creates psychological distance between the raw emotion and the subsequent action you'll take. Your ultimate objective shouldn't be locating an asset that makes you feel less scared and anxious in the immediate present moment. Rather, your genuine goal should be acquiring and accumulating assets that will substantially build and expand your wealth throughout the next 10, 20, or 30 years, completely independent and separate from whatever headlines dominate the news cycle. Step 2, buy the engine, not the anchor. The single best action that the vast majority of people and investors can undertake, and I've consistently advocated for this strategy for 50 years, and it becomes more accurate and valid with each passing year, is to systematically and consistently purchase shares in a low-cost S&P 500 index fund. Let me thoroughly explain precisely why this strategy makes such exceptional sense. When you commit to doing this, you are decidedly not placing bets on individual companies. You're not engaging in the challenging game of attempting to pick future winners and successful enterprises. Instead, you're acquiring an ownership slice of the 500 largest, most productive, most innovative, and most dynamic companies throughout America. You transition into becoming a part owner of Apple, Microsoft, Johnson & Johnson, Coca-Cola, and countless other exceptional organizations and enterprises. You're acquiring an ownership piece of the productive farm itself, not merely a useless rock. You're harnessing access to the most powerful, prolific wealth creation mechanism in the complete history of human civilization. And the beautiful aspect is that you don't require massive amounts of capital to initiate and begin this process. You can commence with as little as $50 or $100 per month. The genuine key to success is unwavering consistency and disciplined repetition over time. Step 3, automate everything and ignore the constant noise and distractions. This brings me to the critical third and final component of the strategy. The biggest opponent and adversary of the individual investor is not actually the market itself. It's actually themselves, their own emotions, psychology, impulses, and behavioral biases. Many investors purchase aggressively and enthusiastically when they're feeling excited and optimistic, and they precipitously sell in panic when they're feeling terrified and pessimistic. You must systematically remove yourself from the decision-making equation and process. The solution is straightforward and clear. Establish an automatic recurring investment every single month for an identical predetermined amount directly into your index fund. Rain or shine, regardless of market conditions, when the market is performing well and rising upward, you'll purchase fewer shares with your fixed amount. When the market is declining and everyone around you is panicking and selling, that same fixed dollar amount will purchase considerably more shares. You're automatically implementing what's called dollar cost averaging, constantly purchasing low. This simple, automated strategy of consistently dollar cost averaging into a comprehensive index of productive American businesses represents the most reliable, dependable path to long-term financial wealth available to the vast majority of people. It demands no genius genius-level insight or intelligence. It demands no specialized knowledge or particular expertise. It demands no perfectly timed market entry or exit. It only demands the personal discipline to maintain the process consistently and the faith and conviction that American economic productivity will continue to generate wealth and expansion over extended periods. And that has been consistently the single best wager and bet you could possibly have made for the last 200 years of American history. Let me reiterate and emphasize this crucial concept one more time, because it contains the absolute foundation of everything we've discussed and analyzed. The genuine solution is emphatically not to flee in panic and conceal your money within sterile, unproductive assets. The real solution is to intelligently harness and leverage the collective intelligence, innovation, and immense productivity of the world's greatest corporations and businesses. Acquire meaningful ownership pieces consistently and persistently, and permit the extraordinary power of compounding interest to perform the actual work on your behalf and in your favor. So the genuine, authentic secret that has been hiding within the gold market is that the gold market itself is ultimately a distraction and a sideshow. It's a narrative constructed around ancient fears and anxieties, not modern economic realities. The true story, the genuine location where substantial fortunes will be generated and accumulated, exists in possessing and owning the enterprises and organizations that actually create, that actively produce value, that continuously innovate. The coming great wealth divergence will make this reality clearer than ever before in history. Those individuals who maintain ownership of the sterile cube will observe their purchasing power stagnate and decline gradually. Those individuals who maintain a consistent ownership stake in the productive farm engine will experience their wealth grow and compound in remarkable ways that will secure their family's financial future and success. Don't permit the fear-mongers and salespeople to manipulate you into committing a devastating financial mistake that will echo for multiple decades. Don't trade the dynamic, innovative, constantly wealth-creating engine of American business and enterprise for an attractive but ultimately useless shiny rock that contributes nothing and merely sits there gathering dust. When you examine and consider it carefully, the choice appears remarkably simple and straightforward, doesn't it? The great event approaching is an intellectual awakening and recognition of truth. And for you who are reading this today, that transformative awakening can commence immediately, right now. Thank you sincerely for your time and attention.